Hi, and welcome to this module on cost-based pricing. Now, this technique is probably the one that is the most widely used, and it is based on the items or some of the items that you can find in your income statement. If you don't know what an income statement is, we have put an example of this in the section. Obviously, depending on your business, the various items can be different from one business to the next, but the idea is the same. So that will give you an idea of what we need to consider into the calculation of your price for this technique. So what do we need to take into consideration to find out how much you should charge your clients? You need to take into account the cost of your raw material. Now, even though you are in the service industry, that will apply to you if you resell something that is not your own. A great example of that would be travel agents. They will resell packages made by airline companies, by other type of companies, and they will sell that to their clients. Now, their margin for getting some profits will be the difference between what they purchase those packages from and the price at which they sell them at to their clients. So the cost of raw material is the price that they pay for those packages. You have the cost of production. That is what it costs you to do your transformational process for your client within your company. So your client enters your company, there's a few actions that you take, your client exit, and that transformational process has a cost to you. Either you do it yourself, you have a team that does it for you, so you have to understand those things. You also have administration costs. So things like rent, electricity, insurance, city taxes, business taxes, things like that would come into that item. You also have the financial cost of production. If you rent equipment, machineries, also if you have bank accounts, if you offer financing, those things will enter into that calculation. You also need to find out what is the volume of sales that you will have. Why? Because you will need to spread all of those costs over various items. Obviously, you don't necessarily want to have a few items supporting all of those costs. So you want to spread it over so that your price to your client makes sense. You will also find through that technique your break-even point. So your break-even point is the point at which the units or the amount of units that you will sell will start to cover your cost. So that's the break-even point, and after that, you're getting more and more profits from the sales, the following sales. What else do we need to take into consideration? So the acquisition costs, financing, credit card, third-party financing, all of that needs to get into your calculation. If you are a local business and you include delivery in your pricing, then you need to include your delivery. And the last one, which is probably the most difficult to find out, is your profit margin. So how much profit do you want to make out of your operations? Now, that varies greatly from industry to industry or from segment to segment. One of the ways that you can find the answer to that question is search online. There's various publications, various analyses, studies that can help you benchmark your company to similar companies or similar operations out there. A few things that I'd like to mention, just so that you understand. Maybe you want to do that with your accountant, but at least you have an understanding of how this process works. There is a type of accounting technique that is called accounting by activities. What it does is that it spreads over your cost that you will have identified through the various items that we mentioned through your products that you're selling, but based on the amount that those products use those resources. What do I mean? If you have an item that you're selling that is very low, has a very low production cost versus an item that has a very high production cost, so that means you have more man hours, more time in the workshop for that item. Well, accounting by activities, what it does is it spreads the various costs on a more scaled to the utilization of each item. So I don't know if that makes sense. Rather than having it as a prorata of the percentage of the sales. So it is a little bit more precise. You know a little bit more what will be your more profitable items that you sell. So that's a technique that you may want to use and talk to your accountant about. All right, so if you have any questions or comments, as usual, feel free. Thank you very much, and I'll see you in the next module.